Hi, my name's Joe Achituro. I'm a certified public accountant, and I'm going to teach you everything you need to know about doing your own taxes. So let's get started. All right, so do you need to file a tax return? Let's figure this out. First criteria is going to be income. All right, we're going to take a look. Did you work for your money? Or is it passive? Is it unearned income? Unearned income is going to be income from your dividends, interest, capital gains, things like that. Are you married? Right? If you're married and you have your spouse that files a tax return and they itemize deductions, and you have made $5, then you have to file your tax return. It's required. Earned or unearned income. So we have a special calculation at the end of this video, or at the end of this little segment, that's gonna a formula, or we're gonna take a look at whether or not we need to file if we have earned plus unearned income, because some people don't have any unearned income, and some people don't have any earned income. So when you have just earned income and you make over $12,000, you have to file a tax return. Why? Because your standard deduction is $12,000. So every dollar above $12,000 is going to have some sort of a tax attached to it. So there's your threshold. Now, this is particularly for people in general. It's a general threshold, right? So if you earn $12,000, I'd recommend filing your tax return anyway, because your federal tax return is going to be free. And many government programs, if you make such a low amount of money, are going to depend on you also providing proof that you don't make any money, and part of that proof is a filed tax return. So these are guidelines that say if you make over this amount, file the tax return. But I think if you're going to make, even if you make less than this, you should probably file a tax return anyway. Now, let's move on. 65 or older, or blind. See, what happens is your standard deduction goes up, and when that means your income threshold for when you need to file a tax return is also going to go up. Right? So 65 years or older and blind. So the more things wrong with you, see, the bigger deductions you get. All right? Now these are the numbers for your married. You're going to notice that they're lower. So married people do kind of get punished a bit. If you're unearned income, see, this is going to be a lot lower. Let's take a look at it. Must file a tax return if you're single and your unearned income is over $1,050. These are all 2018 numbers again. If you're 65 and older or blind, $2,650 of unearned income. If you're 65 or older and blind, $4,250 of unearned income only, right? These numbers are unearned income only numbers. So you don't have any income you worked for in the particular year, 2018. If you have both unearned and earned income, here's the criteria. When you're single and you're under 65 years old, you're going to do this calculation. Your gross income, which is earned plus unearned, was more than the lodger of $1,050 or your earned income alone of 11,650 plus 350, which is 12,000. Continuing on, single dependents, the same formula, right? Same formula, just the numbers change a little bit, right? Gross income, your earned plus unearned, was more than the larger of this number, or your earned income up to that number, right? It's very simple. Same with married, just the numbers change. Just the numbers change. You can pause it here if you want to take a look at what those numbers are. But again, I recommend almost everybody file a tax return. Does the dependent need to file their own tax return? There's a special criteria. So that the last 3 pages showed specific dollar amounts. These aren't dollar amounts specifically, but these are going to be reasons for you to have to file a tax return. One is going to be you owe alternative minimum tax. I'm not really going to get into that. If you owe alternative minimum tax, you should be using a CPA because you have high amounts of income and all sorts of other things going on that are going to be a little too complex for you to really be doing your own tax return. Additional taxes on qualified plans, right? So if you have any sort of retirement plans or anything like that you pay excess taxes on because of your contributions that you make, if you make excess contributions or something like that, then you would have to pay an additional tax on those contributions. Medicare tax, Social Security tax on tips, not reported to your employer. I've never seen this, but I mean, it does happen. If you earn a certain amount of money from tips, I find most people that work in jobs that receive tips don't usually report their tips. You're supposed to, right? You're supposed to. If you don't, if you do receive your income in tips, you should, or you're supposed to, file an income tax return. There's no threshold to a dollar amount there. Additional tax on HSA plans. So if you put too much money into your HSA, you have to pay a special tax, right? That's what that is. Group term life insurance. You get some income on that. You should be filing a tax return. Railroad retirement tax on tips you reported to your employer. File a tax return. Household employment tax. That is if you have a household employee, like a maid or gardeners, you'd be wealthy. I'd find it hard to believe you wouldn't have passive income, but maybe you're at some point where you've given away all your assets, I guess. And then you'd also have household employment tax because you're paying people that work in your house. Any recapture of tax credits? If you received Archer MSA, medical savings account, Medicare Advantage medical savings account, or HSA, health savings account distributions. If you've received any of those distributions, you have to file a tax return. Any net employment earnings from self-employment, right? If you're self-employed and you've made $400 or more, file a tax return. That's also going to require Schedule C in most cases. Wages of $108.28 to be exact, right? If you do some work for a church or a qualified church control group, or some exempt group they're exempt from Social Security and Medicare taxes, and you've made over $108.28, you need to file a tax return. If you have advanced payments of your premium tax credit, what's typically going to happen is you're going to get a Form 1095-A, right? Same thing with advanced payments of health coverage tax credits, in a form of 1099-H is received. You're gonna have to file a tax return. If you are, some people are defer income or defer foreign income, file a tax return. Again, those are sort of complex things. If you have those, a lot of times you should be just using a CPA to do your taxes. Special rules. Who doesn't need to file a tax return? Children who only have passive income. So if your child only has dividends, interest, or capital gains under $10,500, then they don't need to file a tax return. If it's above $10,500, in this particular instance, your dependent child would need to file their own tax return. So again, below a $10,500 of capital gains plus interest plus dividends, you can report that on your own personal tax return and not file one for your child by using Form 8814. And that's it as far as who needs to file a tax return. I'd recommend, if you're head of household, you definitely file. I didn't even go over that. If you're head of household, you definitely should be filing tax returns, because head of households have children. Children bring on tax credits. The only way to get the tax credits is to file a tax return. So it's a no-brainer if you're head of household that you file a tax return. And that's it. I hope you learned something about who needs to file a tax return in 2018. Have a great day. Thanks for watching the video. I hope you learned something. Please click the subscribe buttons below. And in addition, there are links taking you to the tax software that we use for most of these tutorials. When you click on the link and you use this tax software, we get credit. When we get credit, we can keep providing you with these free tutorials. So again, if you found these videos helpful, please click on the links, help support us. And in addition, if you were to join myfreecpa.com, you could get these videos without any commercial interruptions, which would help everything move along faster. And you can actually save the videos so that they're there for you year to year as your situations either remain the same or change. And it's just a one solid place for you to find exactly what you need to help you prepare your tax returns every year. So once again, thank you and have a great day. Thank you once again for watching this video. Don't forget to subscribe. Don't forget to click notifications. On My Free CPA on YouTube, you're going to have a link to myfreecpa.com. On here, I would encourage you to sign up, get yourself an account, because you're going to be able to save all the courses I put that are relevant to you. And you're going to be able to go back and reference them year after year after year. In addition, there's going to be a Do Your Own Taxes link. This is going to be free online tax software if your income is below a certain threshold. It's basically just like TurboTax or H&R Block online taxes, but cheaper, right? This is the professional software I use, put online for individuals. I'm going to be using this software in most of my videos to explain to you how to do your own taxes. So if you want to sign up for this, please use that link. And when you use that link, I get credit, right? If you're going to do a tax return that's going to cost you some money to prepare using the tax software, because again, not all tax software is free depending on your income levels and your other circumstances, I am going to get some credit and get paid for this so I can keep putting up this videos for you. Thanks once again, and have a great day.